Assalamualaikum, my name is Nikah binti Abdul Rahman and I'm from class BA 2424A. So today we will discuss about the difference between the Islamic financial institutions versus the conventional financial institutions. We will discuss from the view of value proposition, structure, its operation and its instruments. So what is value proposition? So value proposition refers to the value a company promised to deliver to customers. The value propositions provide a declaration of intent or statement that introduce a company's brand to consumers by telling them what the company stands for, how it operates, and why it deserves their business. The value proposition of Islamic finance is different from conventional, where the conventional is geared toward consumer-friendly customer service, which means they attract more customers to aim profit maximization than socio-economic benefits for consumers. So socio-economic benefit is interaction between the social and economic habits of a group of people. For example, like dating habits of millionaire. We as the millionaire and the conventional bank is the one that having dating benefits from us. So for the Islamic banking value proposition, even though the Islamic finance industry is not averse to profit making, it's more to bring benefits to consumer close to the doorsteps, which give mutually beneficial manner. So next is firmly rooted in the Maqasid Ash-Shariah, traditionally involve ethical investing and green business. So this consider the fundamental of modern social investing like ethics, consumer protection, community and global development. For the structure of Islamic banking, so Islamic banks is set up based on the sources and application of funds theory. Then there should only a single flow between the deposit and the financing. This said that there should not a discrete function throughout the flow. If single function is when the customer deposit, then investment pool is used to fund financing portfolio that create profits. So when the returns are generated, the bank and the customers will split the profit. This is how the Islamic bank has different way on managing the profit and loss sharing financing. Then the last one is Islamic banks also structured with the principles that derive from the Al-Quran, which is the central religious text of Islam, which is culturally different from ethical investing. So for the structure of conventional banks, where the setup purpose of conventional is to collect deposit and to give loans. Conventional has two very distinct functions, which is the collect deposit and give loans. The treasury function tries to balance the returns to shareholders' funds. And lastly, the conventional is structured based on fully man-made principles where all the decisions are only based on humans' logic. For the operation of Islamic banking, so firstly, the avoidance of interest-based transaction, or we call as riba. So Islamic banks cannot issue loans like the conventional, but we can issue the interest-free loans. So they introduce the concept of buying something on the borrower's behalf and then sell it back to the borrower at profit. So Islamic bank cannot finance any project that conflict with moral and ethical principles. So being a complete code of life, Islam considers a core accountability of Islam institutions to consider Islamic ethical and moral principles in making decisions by avoiding all form of speculation. Quran says, "O you who believe, guard your duty to Allah, ittaqullah, and speak words straight to the point." So in the verse of Quran, the word guard your duty to Allah represents the accountability to Allah, and speak words straight to the point leads to accountability to society. So in Islam, there is a greater and broader framework of accountability. So Islam requires faithfulness to ensure integrity, humanity and fairness by avoiding wealth maximization, not like the conventional. So next point, prohibitions, any receipt and payment of interest is the core of the system. So Islamic banks makes a profit through equity participation, which requires a borrower to give a bank share in their profit rather than paying interest. So if any extra money lended, it may be in terms of hibah, not interest. So its operation also not limited to banking, where it also has the instruments like the insurance takaful, Islamic mutual funds, capital markets, and more. And lastly, both risk and profit being shared with depositors, where this one is under murabahah and musyarakah. For operational mechanism of conventional banking. So firstly, the investor is assured of a predetermined rate of interest, but subject to revision where it is based on the current interest rate. Then these conventional banks also makes money from a variety of fees and by earning interest income from loans. Then the contract also not based on an absolute value. The sooner the borrower can pay all the principal, the cheaper the amount of interest to be paid. So as conventional banks, objective is profit maximization. So they will offer many incentives to attract the resources like us, the depositors and the companies. Then they will lend the money back in term of loan. So here we will continue with the market instrument from this story. So that's all from me. We can see that Islamic banks has created an option for the Muslim to avoid the prohibitions in Islam. So the choice is there. Now we are the one who need to make wise decisions. So choose wisely and good luck. Thank you.